Hi guys, this is Victor with LMS CPA. Welcome back. In today's video, guys, we're going to be talking about taxes related to your crypto investment. And so we're going to be talking about 8 different strategies that you can implement so you can lower your taxes in your crypto investments. So guys, we all know that the last few years, crypto has been or has become a very hot topic. And the stats show that the early adopters have made significant profits in the early innings of the crypto mania, the blockchain technology, if you will. And good for them. So as you become more aware of crypto, it is very important that you consider also your taxes, okay? So we're gonna be talking about 8 different strategies that you can implement in order for you to lower your crypto investment taxes, okay? So hang tight, let's dive into it. Before we talk about that, guys, before we talk about the different strategies, let's talk about how the government and how the IRS sees crypto investments, or how the IRS sees crypto. According to the tax law, crypto is considered property. So it's the same as you have a, let's say, real estate investment, if you have a bond, if you have a stock, and so forth. The IRS is going to see it as property. So if you buy crypto and you sell it for more than you paid for, you have a gain. If you sell it for less than you paid for it, you have a loss. Okay, so there's different, treatments here. If you make money or if you lost money, and we're gonna be talking about that. Okay, so the important thing is that crypto, guys, is considered property for tax purposes. Okay, all right. So let's talk about strategy number 1. Okay, so with that being said, guys, with that information, let's dive into it. Number 1. So we've discussed in the past, guys, short-term gains versus long-term gains, right? So the easiest way for you to lower your taxes to a degree is if you can hold on to your investments for a period of 12 months, basically a year, your tax rates are gonna be lower. Why? Because long-term tax rates are significantly lower than short-term tax rates, okay? So as we said, different capital gains rates will apply depending on how long you own cryptocurrency. If you want to lower your tax bill, hold your cryptocurrency long enough to turn your short-term gains into long-term gain. It may not be an easy task, but if you have the patience to keep your crypto for at least a year before selling it, then you'll likely pay a reduced tax rate on your capital gain. Let me give you an example, okay? Let's say that Mary, a single taxpayer, earns $70,000 in wages in the year 2021. She also has $5,000 of gains in the sale of cryptocurrency. If the gain is a short-term gain, she'll have $75,000 of ordinary income after claiming the standard deduction that leaves her with $62,450 of taxable income, which puts her in the 22% tax bracket, and a result in a tax bill of $9,488. However, if the gain is long-term gain, the $70,000 of ordinary income minus the standard deduction is still taxed at 22% tax bracket. However, the $5,000 of capital gain in income is only taxed at 15% tax rate. That means an overall tax of $9,138, which brings a tax savings of $350. Okay, so with that $350 that you're saving, you can buy even more property or even more crypto, okay? As I said, guys, you have to have the patience. In that example, in that strategy, guys, you have to have the patience of holding the asset, the property, the crypto for longer term, okay? For longer than a year. And we all know that crypto goes up and down and the market is very volatile. Okay, especially in the early innings, as we're seeing. That's why you are not seeing institutions jumping into the mania as of yet, right? Maybe they're doing it on a little by little basis, but it's very volatile because the liquidity is not yet being set by the institutions. However, again, if you have the patience to hold for longer than a year, do so, because then you'll be saving money on your taxes. Strategy number 2, guys, offset your capital gains with your capital losses. You might be saying, Victor, what do you mean offsetting my capital gains with my capital losses? I'm just trying to make money here. And I'm like, I'm with you guys. I get it, right? Who wants to lose money, right? Who wants to lose money? No one wants to lose money, okay? So it's like Warren Buffett says, strategy number one, or I guess it's rule number one, don't lose money. Rule number two says see rule number one. So the idea is actually not to lose money, but we're not living in a perfect world. Okay, so sometimes hopefully you'll make more money, and sometimes actually you are gonna lose money. Okay, so we have to be aware of the conditions in which we live, and sometimes things happen in a way that are not as expected. So at any rate, we're talking here about taxes. Okay, so so let's say that you actually made money in some of your investments and you actually lost money in some of your investments. Okay, the IRS allows you to offset your gains against your losses. Okay, and that is a good thing, because if you have investments in which actually you believe are not gonna go up again, get rid of them. You sell them, right? And then you made money on other investments. Okay, so these losses, you can offset it against the gains. Okay, and that is a good thing. That's a strategy that you can utilize. People call it tax loss harvesting. You can utilize that in order for you to lower your taxes. Okay, now you have to be aware that there's different ways for you to do this. Okay, and bear with me. Okay, so first, you can offset only losses, let's say, for example, of the same kind. Victor might be saying, kind? What do you mean? Dude, what are you talking about? I'm like, okay, bear with me again. So let's say that you have short-term losses. Okay, those short-term losses, you can only offset it, or first, you can only offset them against short-term gains, right? Then you have long-term, losses that you can utilize to offset long-term gains. Okay, so first you have short-term losses against long-term losses. Okay, then you have long-term losses against long-term gains. Once you have that, then you can utilize any loss of any kind against any gain of any kind. Okay, so short-term, long-term, then any kind. Okay, you got it now? Does that make sense? I know it's confusing, but you can get it done. Okay, all right. And then let's say that you've done short-term, long-term, any kind, and you still have money left, meaning that you lost more money than you made money. You can utilize $3,000 extra to offset your ordinary income. And then if you have more money left, meaning that you lost more money than you made, and then you utilize the $3,000 threshold or limit to offset your ordinary income, then you can carry the remaining of the losses to the next year. Okay, I know it's confusing, okay, but it's one of the best ways that you can utilize your losses against your gains for tax planning purposes. So let's move to point number 3. Strategy number 3. So you may want to choose to sell your crypto in a low income year. You might be saying, Victor, what do you mean sell my crypto in a low income year? You have to be aware that you can sell it when it's short term, meaning less than 12 months, and also sell it a long term when it's more than 12 months. And you also want to know that if you have income, right? As I said before, if you have income, if you have wages, the wages are going to be taxed at an ordinary rate. And then your capital gains, it doesn't matter if it's short term or long term, are going to be taxed. Okay, so you're going to have 2 levels of income, wages, right? As well as crypto. What if, you're about to retire? What if you retire and you have no wages? You only have capital gains from your crypto investments. That means that if you time it well, right? Actually your rate will be significantly lower because you have no other wages that are going to be taxed. Therefore, your tax rate is going to be either 0%, 15%, or 20%. Whereas if you have wages, as we said in an example before, if you have wages, your taxes can be actually higher. So if you are about to retire, or you expect to make changes in your life and you said, okay, next year I may not be working because I'll be going back to school, I may be taking a sabbatical, I may be, parenting at home, I may be doing different things in my life, right? And I believe my wages or my income is gonna be lower. and you have crypto investments. So if that's the case, then you may want to choose to wait for your wages to come down. Basically, if you're gonna work less or not work at all, then you consider selling your crypto investments. It doesn't matter if it's short-term or long-term, right? Actually, it does matter, because if it's long-term, then your tax rate is gonna be lower. So if you time it well, basically, let's say next year or this year, a couple of years from now, my wages are gonna be less because I may be working less, changing careers, taking a sabbatical, whatever the situation might be. And also you have crypto investments, you may want to consider wait, because then your taxes are going to be significantly lower. The important thing, guys, is that when you do the right planning, then you consider what your lifestyle is like. Okay, what are the things you're going to be doing at a personal level, family level, business level, right? What's going on in your life 3, 6 months, 9 months, a year from now? And then you're like, okay, this is what's going to happen. This is what might happen. And based on that, then you do the right tax planning. Because then if you do so, your economic outcome is going to be better because you've done the right homework. And that's what we're trying to do here. So as it relates to medical expenses, you may have to prepay a medical procedure. Or if you have a dental procedure that you've been planning, maybe this is the year you want to do it, or you may want to prepay for it. If you have a 401k plan at the place that you work, you may want to maximize the contribution to it. You may want to put money into an IRA, right? What you want to do is you want to look for ways for you to lower your taxable income, okay? You may want to do a charitable contribution, and that make you move from the standard deduction to the itemized deduction. Actually, your deductions for tax purposes allow you to have lower taxable income. Therefore, your total taxes on your crypto and your wages or your total income is actually going to be lower. So what I'm trying to say here, guys, is that besides timing your income, you may want to look for additional deductions that are going to lower your overall taxable income. As always, I'll see you in the next one. Take care.